What to expect for the U.S. real estate market in 2023. Today we're going to talk about the market for 2023. It is early to visualize the future, but we may be able to predict how the real estate market will behave in the next 12 months. It is difficult to predict exactly what will happen with the U.S. real estate market in 2023, as it can be influenced by a variety of factors such as economic conditions, interest rates, and government policies. However, it is likely that the market will continue to recover from the impact of the COVID-19 pandemic. Home prices are expected to rise, but at a slower pace than in recent years. Low interest rates will continue to make mortgages more affordable, which will likely drive demand for homes. However, there may also be a slowdown in home sales due to a lack of inventory. Additionally, the market could be affected by any changes in government policies, such as changes to mortgage interest deductions or tax laws. Some of the scenarios for the next 12 months market? One potential scenario is that the market will continue to face a shortage of available homes for sale, which could limit the number of sales and put upward pressure on prices. This could be especially true in certain high-demand markets, such as those in the west and south regions of the country. As a result, many buyers may find themselves in bidding wars for the few available homes, driving up prices even further. Another potential scenario is that interest rates will rise over the next 12 months, which could dampen demand for housing and slow down price increases. This could make it more difficult for buyers to qualify for mortgages, which would likely lead to fewer sales. However, it is also possible that rates will remain low, which could continue to boost demand for housing and support higher prices. What do you think? Can you comment below? The market could also be affected by any changes in government policies, such as changes to mortgage interest deductions or tax laws. Any such changes could have a significant impact on the market, depending on their specifics. In any case, it's important to remember that real estate markets can be affected by various factors, such as natural disasters, pandemics, and political events, which can make predictions uncertain. How about land and residential lots? The market for land and residential lots may follow a similar trend to the overall real estate market. Low interest rates and strong demand for housing could lead to an increase in demand for land and residential lots, which could drive up prices. However, the pace of price increases may not be as rapid as for existing homes, as building a new home can be more costly and time-consuming than purchasing an existing one. A shortage of available land in desirable areas could also put upward pressure on prices for land and residential lots. This could be especially true in urban areas where land is scarce, or in areas with a high demand for new housing, such as those near job centers or desirable school districts. It's also important to consider that the construction industry, including land development and residential lots, also depends on the economy, regulations, and labor market. A downturn in these factors could affect the development and availability of new residential lots. And rural residential lots? The market for rural residential lots may differ from that of urban or suburban areas, as the demand and supply dynamics can be quite different. In general, rural areas tend to have a lower population density and fewer job opportunities, which can limit the demand for housing. However, there may be a growing demand for rural residential lots as people seek more space and a lifestyle change, due to the pandemic, which has led many to reassess their priorities and look for more space and a slower-paced lifestyle. A key factor in the market for rural residential lots is access to utilities and infrastructure, such as electricity, water, and sewage systems. The cost of installing these services can be high, which can affect the affordability of homes built on rural lots. Additionally, zoning and building regulations in rural areas may be less restrictive than in urban areas, which can make it easier to build on a rural lot but also can affect the value of the property. Another important factor is the location of the rural residential lot. Proximity to amenities and transportation can affect the desirability of the area. For example, a rural lot located close to a major highway or a town with amenities like grocery stores and schools could be more valuable than one located in a more remote area. In general, the market for rural residential lots is likely to be influenced by many of the same factors as the overall real estate market, but the specific dynamics may differ. Factors such as location, access to utilities and infrastructure, zoning and building regulations, and proximity to amenities can all affect the supply and demand for rural residential lots and therefore the prices. As with the overall real estate market, any changes in government policies could also have an impact on the market for land and residential lots. For example, changes to zoning laws or regulations regarding building codes could affect the supply of available land and the cost of developing new homes. Overall, the market for land and residential lots is likely to be influenced by many of the same factors as the overall real estate market, but the specific dynamics may differ. Thank you to watch the video. Now is the time for your like, subscribe, and hit the bell to be notified of the next videos. I see you next time.